Today was certainly a strong market day and a pretty strong rally from the open all the way to the close. But it's starting to look like we're at a pretty high level, and we've gotten to this level pretty sharply. Just all of a sudden, S&P 500, Dow, NASDAQ, even though it's not at an all-time high, decide to make a very just sharpward slope. And that was something that didn't really seem like it should happen. But what's going to happen here? Is it time for a correction? Is it time for a little bit of a sell-off? And I believe the answer to that is no. If you look at the rally that happened today, it was very defensive. A lot of, safer tech stocks, which are comparable to just a store of value or a US Treasury, but provide some sort of growth, that was leading the market today. Other well-priced tech like Intel was leading the market today. That's like so unbelievably well-priced. And you had a lot of well-priced, safe stuff rallying and bringing us to this level. And I think this is the beginning of another bull rally because the data I have been looking at says investable cash on the sidelines is still at a very high level. I believe inflation expectations are going to rise. So once inflation expectations begin to rise, people don't want to be holding that investable cash because it's giving them a negative yield. So where do they go? They go to things with a positive yield or just positive rate of return. They will look for things like stocks, and bond yields are going to start ticking up. So maybe people are going to want to start buying some of those bond yields. But the thing is, the Fed is getting very heavily involved in that. So that market, in terms of total return, is going to still have some suppression on it, yet inflation is still going to be a thing. If the Fed doesn't keep bond yields relatively low, it's possible we have a massive debt crisis, or at least a massive debt sell-off. Debt crisis, I don't know. It's going to be hard for people to borrow. It's going to be an interesting situation. Seems to me like the Fed has to get involved, has to weigh inflation expectations, all of these kinds of things. I would love to say the bond market's going to give us some sort of answer, but I don't know what the bond market. I think this is going to be an unusual period of time where this whole notion that rising bond yields equals falling tech stocks, I don't know if that's necessarily true because people would, buy bonds as an inflation hedge, but it almost seems like they're going to continue selling off in perpetuity. So it seems like nobody's going to want them. And they're going to want stocks, which are likely to continue in perpetuity and in an inflation environment, continue to adjust with the inflation environment in the positive direction. So given that there's high levels of cash on the sideline and people are, seemingly putting it to work today, but putting it to work in defensive areas of the market and the most exciting, highest yielding areas of the market, and I'm not saying, people's fundamental risk tolerance is going to shift to risky stocks. But what I'm saying is those areas of the market that are more defensive, all right, we're seeing something happen there. That stuff has recovered from the previous 2-ish month sell-off we have just experienced. The correction, which seems like maybe it'll happen now that we're at new all-time highs, has happened and recovered in the defensive stocks. But it has not recovered in the more speculative stocks. So I'm not saying that some sort of speculative boom is going to happen. What I'm saying is I'm not noticing excessive bullishness. So I think with investable cash on the sidelines, with a concerning inflation and debt market, people are gonna look, and inflation hurting that cash, people are gonna look to put that cash and keep cash in the market. So it's a pretty good environment for possible continued bull run, and we will see what happens. If you want to venture into that highly speculative market, I would do that, but I would buy names that you are comfortable holding for years. These are year-long projects for tech companies. If you are buying a SPAC because you want to have weekly call options on it, not the right approach. It's not an option, short-term option area. That's, if you want to, you might as well sports gamble. It's literally that. If you want to not sports gamble and you want to, say, invest in real estate almost, that's going to generate a very good return, better than real estate. You buy something and you hold it for many years in an inflation environment that is some fundamental, underpriced future tech. That's how you play that market. So, hope that makes sense to you. And until next time, peace out.